The following program was paid for by Templar Real Estate. The views and opinions expressed on this program are not necessarily those of the staff and management of WMTR. As always, it is advisable to consult a professional before making a major decision. It's time now for the Templar Real Estate Talk Show. Here's your host for the program, Joseph J. Zoppi.
Hello, welcome to the Templar Real Estate Talk Show. My name is Joseph J. Zoppi, real estate investor, consumer advocate, author, and managing partner of Templar Real Estate Enterprises. I'm recording this from my home, and as I've said in numerous weeks, I'm getting kind of comfortable with this, so I don't know if I'm going to be recording back in the studio anytime soon, except probably under certain circumstances when I start bringing on more guests, but even that I'm not quite sure. I could probably fiddle with something, work it on through some technology, so home I stay. So that's pretty good, and I'm really happy about that. It saves some time traveling to the radio station and back, and I never have enough time for anything, so I think that'll be good. You could reach us at TemplarCashForHouses.com. That's TEMPLAR cashforhouses.com, or you could call us at 973-315-7990, and we could answer any questions you have, or we could address anything on the air that you may have that you would like to be brought up on the radio show. We'd be more than happy to if we could fit it in. My company is a real estate investment firm. We buy houses for cash. We purchase apartment buildings. We do joint ventures with other real estate investors. We loan money for rehabs and provide transactional and gap funding as well. We work with individuals that want to invest with us in single-family houses as well as apartment buildings. We do not speculate. We're very protective of our money and our investors' money. I'm not a real estate agent. We're not a brokerage, but I do have individuals on staff that could sell your house through the traditional MLS as a realtor. And some of them are very, very good at it. So I encourage it if you want to go through the traditional way as well. The show is going to go over everything there is about real estate, those things that impact real estate. We'll talk about our rehabs, things that went well with our rehabs, the challenges we have. Real estate is a tough business, and we're always running into issues. No matter how well things are planned, there's always something new that comes up. So, that's just the way it is. We will be talking about everything to do which impacts real estate. So real estate is one of your biggest investments, so it's important that you know as much as possible about real estate and how different factors affect real estate, from the economy to anything going on through the world. There's always the ripple effect. One of the things that I continue to say and I continue to push on is that this is only my opinion, and you need to do your research in anything you do. If it's a CPA, if it's an attorney, if it's a contractor, if it's us, we encourage it, and we highly recommend that you definitely research everything before you make any type of decisions. That's very important. As I've said before, when you're looking up information on the internet, you have to understand where the author is coming from. The author might have a certain slant towards a particular way they want to portray the information, so you need to understand that. These writers are going to their editors and they're looking for trendy type things to write, and because of that they might write it in a certain way. So you have to beware of that. I was going to bring up something later on in the broadcast, but I think this is a good example of what's going on right now. So right now in the market, stocks are going up and up and up and up. And, I was very clear. I did not see that as the case. And no one can predict when the market's going to go down or how. There is no timing of the market. So one of the things that's happened is the Fed has injected a lot of money into everyone's pockets, into businesses to prop up the economy, which isn't a bad thing. With that being said, the stock market has gone up. Now, a lot of individuals, especially younger ones, are on this trading platform to invest in stocks called Robinhood. One of the big things about Robinhood is it's basically free trading. There's certain costs associated with it, but they're considerably less than any of the other discount brokers. So you have this cheap money coming into people's pockets, and they saw the stock market go down, and they put this money in. Now, a lot of the big players and billionaires have been and continue to this day to be very concerned about where the market is in terms of the valuation. And there's numerous articles on it. One of the things that I've spoken about is Warren Buffett. So Warren Buffett is sitting on a lot of cash. Why is he sitting on cash? It's because he knows the value's not there. There's no value there in terms of him getting a company at a good price right now. And he's not getting calls right now. So he knows it's not the right time. You have Mark Cuban, which said probably a month and a half ago that he was trying to be an all-cash position. These guys are, they know what they're talking about. And you have some hedge fund individuals as well that are even saying the same thing. But with that being said, you have certain articles that are being written that's saying that the amateur investor is beating out Wall Street, and they're showing them that it's, the market's good, and, there's egg on the face of all these very influential people. And again, that's just an article that's written. Do not always go by what that is, because it captivates you, and then you go, I have to jump in and I have to do this. And that's with anything, whether it's real estate or anything else. When things are going up, everybody looks like a pro. When back in 2000 I was investing before the dot-com disaster, I was like, wow, this is great. I know what I'm doing. And tens of thousands of individuals thought the same thing. Then the market crashed because it was just an inflated bubble. And then the same thing happened in 2008. And I know a lot of investors through my mastermind, and it's an affiliate of like 150 of the top rehabbers and real estate investors for single family and some apartment buildings throughout the country. So, these are the best of the best. And there's many stories that they have of when real estate was going up back in 2007, 2008, before everything was crashing, that they said they couldn't do no wrong. They had the answer. And the same thing is now with the stock market. It's going up, so everybody's a winner. And it's not the case, because there will be a day of reckoning. And as things go up, people become more and more risk tolerant. So they continue to push further on risk, and they get into riskier and riskier assets and positions, and for a while they're going to be making money, and then they'll continue to do it. I'm speaking from experience, so the same thing happened with me when I was trading. I was able to get out of a lot of things without too much heartache, but I knew options really well, so I was able to play it. But a lot of individuals, they're self-taught. I was taught by an individual that was unbelievable in options trading. So, I was fortunate. I had paid a lot of money for it, but I was very fortunate, and I always did well for the most part. But there were times I was on the wrong side, and you have to take your lumps with your bruises and all those things. But with that being said, you really got to watch it in terms of where the risk is, whether it's the market going up in real estate or in stocks or real estate. Right now, we're in pretty good position on a real estate side. Things are, at pretty close to all-time highs. There's not a lot of inventory, so that's good. So as a result, the prices are staying solid. But again, I would not be banking the house or the farm or whatever the case may be that it's always going to be that way. And that's why you always got to be looking at that. And, through all the years of doing trading and things like that, it's really helped me on the real estate side because I'm more cautious on certain things, and I'm always waiting for the next turnaround to go down. So we work that way. We put our risks associated when we purchase properties, apartment buildings, so on and so forth. When we purchase apartment buildings, we're not purchasing these high-end apartment buildings that only a few people could afford. It's more blue-collar, pretty standard apartment buildings that a lot of individuals could afford. Now, some people like the glamour and glitz of these high-end apartment buildings, but that's not us. When things go bad, the first thing that goes bad is those types of assets. And then, it keeps going down further and further. And usually in the area of blue-collar type neighborhoods with apartment buildings, they could absorb a lot and they don't get hit as bad. And that's why we like them. I had a real estate investor that he invested in Livingston. He had beautiful houses. He made really good money, but he had a couple of bad deals, and he lost like $300,000 in one house and $150,000 on another. So that's the problem when you're dealing with really high-end properties, whether it's apartment buildings or houses. When I looked at that one house that he lost $300,000 on, it was flawless. It was just a beautiful, beautiful house. But it happens, and that's why I learned from that. I said, I'm not doing anything like that. I'm just doing basic houses that everyone could afford, not a $1.4 million house. I'm not doing it. And we're very happy for that. We're financially super stable and growing, and that's just through ensuring what the risk is and protecting your assets. That's one of the biggest things you do is you do asset protection, and we want to make sure that we don't lose money and we don't lose money for our investors. Right now we're looking for apartment buildings. So if anyone has an apartment building they want to sell, preferably over 100, 200 units, but we'll do smaller ones. But if you are, please contact us. If you know anyone that has an apartment building or a house, I will provide a finder's fee, like $1,000 on houses, and I'll even, if it's an apartment building and it's a large apartment building, I'll even go well above that. But for houses, I'll give you $1,000 if you give us a lead, and everything's always private and confidential. And if that's the case, we'll be more than happy to compensate you, and thank you for that. So I'm closing out on my one segment. I will be back shortly. Thank you very much.
Life can be a roller coaster, and sometimes you need to sell your house fast. That's why there's TemplarBuysHouses.com. Maybe you're downsizing, getting a divorce, having health or financial issues. If so, head to TemplarBuysHouses.com. TemplarBuysHouses.com. TemplarBuysHouses.com will buy your house quickly and without hassle. If you've inherited a house that is vacant, contact TemplarBuysHouses.com. Dealing with them is easy and quick. No high-pressure sales tactics, and you won't have to fix up the house. They will buy your house as is. You pick the closing date and when you move out. No commissions and no hassles. Contact TemplarBuysHouses.com. TemplarBuysHouses.com. With an A+ rating from the Better Business Bureau. Call 973-315-7990. That's 973-315-7990.
Be sure to listen to the podcast of the Templar Real Estate Talk Show. Find it now at TemplarBuysHouses.com.
Hello, welcome back to the Templar Real Estate Talk Show. My name is Joseph J. Zoppi, Managing Partner of Templar Real Estate Enterprises. So in my last segment, I was talking about individuals' opinions, especially when you look at it online or in newsprint, and that individuals have a storyline that they want to perpetuate or state, so the story is going to be slanted in that direction. And I'm just, again, warning people to understand the pros and cons of everything. Same thing I said is with the market going up, and just to be wary of it. One of the things about real estate I like, it's a hard asset, and it's a lot, it's tangible, it's something you could touch. And since investing in real estate, there's just so much more comfort in knowing that you could see something, you could touch it. It's a lot more tangible. You don't know what's going on with some of these companies. There was a company in Germany, they just found out they're short $2 billion and they're not sure where it went. So they weren't able to make certain payments, so their loans are going to be called, and basically they're going to be bankrupt. And those individuals that own the stock, well, they're going to lose the money. Same thing with Hertz. So Hertz, about a month ago, was trading at 56 cents. And then individuals were speculating, they were jumping in on it, and it went up to, it was close to $4 or something like that. And then it's come down, it was down to like $1.56 or buck and change. So you have a company that's basically bankrupt. They can't make their payments. And what they did is they wanted to issue more stock. And then the SEC looked at their plan and said, no, we don't like it. And as a result of it, they were going to ask people to put more money into a bankrupt company. And, a lot of people might have said, well, you know what, maybe I take the risk, and I'm up from 56 cents and, maybe I'll put more money into it. It's going to go up. I really, really frown upon that. Way back when I was going to do the same thing. So a long time ago, I was looking at Kmart, and they had a lot of problems, and then they were going to issue new stock, and I was like, well, this sounds pretty good. And then I didn't execute the trades I wanted to, and then I find out later that if I did, I would have been just throwing money away, because again, the stockholder is, especially common stock, is the last one. So you have your creditors and everything else like that. So, some of these individuals that craft these different financial scenarios, they make the money and no one else does. So please be wary of that. And any of these things that went on, there's a thing in the market they're calling, have what's called zombie companies in the zombie market. So what's a zombie? So zombie is, something that's dead, like a person that's dead, but it's still living, even though it's dead. Or it comes back to life, even though it's technically dead. And what they're saying is that some of these companies have extremely high debt. And the government is helping prop up these companies, which make them basically zombie companies. They're basically insolvent or close to that, and there's money continually being pumped into these companies to prop them up and keep them alive. And people are no wiser, and they purchase stock in it and they really get hurt. Same thing is with the market. So as I said, the market continues to go up. The valuation of the market's like near where it was in February when everything was doing great. So you have to think about it. You have an economy that was shut down, a number of businesses that were just completely shut down, like the auto industry for the most part, just a lot of companies. And the valuations overall are at and above where they were in February. And just some common sense there. So they're saying basically in some of these high network individuals are saying this is basically a zombie market because the Fed's pushing so much money into people's pockets and into the market that it continues to rise even though it shouldn't be. So that's more than my 2 cents. I've spent a lot of time on this, but I thought it was very, very important for everyone to understand it and realize, that's what you're dealing with the market. I'm not saying that you shouldn't invest in the market. Well, I personally am very bullish on real estate, but to diversify and to be in the market's fine. And if you have some large companies like Amazon and Google, things like that, those are solid companies. But again, it depends where you buy in, and they're going to be a downturn on that as well, and especially if the market comes down hard, whenever that will be. You're going to take a big bath. So just something to be wary of. I prefer the hard, tangible assets like real estate. Some people like gold. I'm into real estate. So another thing I'd like to talk about is, I saw this week a single one-bedroom condo. It was in an affluent area in Bergen County, and the individual selling it, and he wanted like super top dollar for it, and he didn't want to pay a real estate commission. He just did not want to do anything. He just wanted top dollar. And his mom passed away, but he said that he thinks he could sell it. And I spoke to him about a couple different scenarios, as a cash offer or for us to list it as an agent. And he didn't want that. And, I told him there was a couple of drawbacks with it. And, I'm honest with him. Is first of all, it's a single bedroom condo. So normally single bedrooms are very hard to market. They just are. Because a lot of people want a second bedroom for a study or something like that. Or, if they have a kid. And especially nowadays. So with the pandemic, more individuals are starting to work from home. And as a result of that, a 2-bedroom apartment or condo, townhome, whatever the case may be, is in more demand, especially now, than a single bedroom. Whether it's, say, an apartment or a condo. Now, in certain areas, you could still get away with a single bedroom. Blue collar networks or neighborhoods, definitely the case. But if you're talking about a high priced area where there's a individual that's going to spend a lot of money and they're a professional, their job lends itself, for the most part, a professional, to working from home, as opposed to maybe a blue collar plumber, a police officer, construction worker, so on and so forth. So again, it's not as marketable, and that's what you got to look at. You can't force the issue of real estate to be something it's not. and you have to understand it, and you have to market it and sell it based on that price. You can't just will it to be more expensive, and it just won't sell. And also the carrying costs with it. So this individual is going to be paying, high taxes, plus for the condo it was like $400. So by the time it was over, he was spending over $1,000 a month just holding the townhome. His mom passed away last year in November. So, he's already spent, $8,000 or whatever the case may be on that. And he's going to continue to rack up expenses until he sells it, but he wants to sell it top dollar, and he says he'll put it on Craigslist. Okay. The traction he's going to get on that is not that much. And that's why listing it with an agent is always good, because you're going to get the MLS, traction from the MLS, and individuals are going to look at it and see it on Zillow, and agents are going to see it on the MLS, which is great. Another thing that we did this week is I'm right now in the process of selling one of our houses that we were going to rehab, but we decided not to. So I have an investor that wants it. I was going out there, so he had to get a tank sweep done, which is where someone goes throughout the property and walks to make sure that there's no hidden underground oil tanks, which could be an environmental issue if they're old and abandoned and not decommissioned correctly. So I was there, and there was some bushes and kind of trees, maybe, that were cut down. They were a few inches thick. It wasn't huge trees, but they were piled up. And the gentleman had to scan that area, and he said, well, I can't scan it. So I said, hey, there's no big deal. I'll just move them. So I was moving them. I was having problems with one specifically, and I pick up on certain things, So he says, "Oh, you're not going to be able to do it," and I says, "Oh no, I'll do it." And when I hear immediately you can't do it, or that just hits my nerve, because I'm never into the can't do something. It's always how to do it. So when I was pulling on it, he says, you're not going to be able to move it. I just moved a little bit and moved in a different direction, and I was able to pull it. And that's the thing, individuals, are always saying what you can't do. And in our organization, it's not what we can't do, it's like how to do it. So if you in the mindset of can't doing something, you're already not going to be able to do it. And I don't know why, I've just always been in the mindset how to do it, just how to do it, not how you can't do something. And as a result of that, your mind thinks differently, and you try to problem solve. And it's always worked for us, and I still instill that upon our entire staff. And if I have someone that's in that mindset where you can't do something, that's really a challenge. And when I hire in the can-do attitude, not the can't-do. So that's very important. The other thing that we're going to see a trend towards, a lot of people are moving out of Jersey and out of New York, and I've said this before, into Florida. And as a result of the pandemic, more and more people are flying and traveling as fast as they could to Florida. Florida has seen an extremely large increase in the number of sales this past month. That's because everything's opening up, but also individuals want to leave New York City, they want to leave New Jersey. I have an individual that called me the other day. She's down in Florida. She has a house in Toms River. She says, I don't want the house anymore, I want to stay down here. And I'm seeing it and hearing it more and more, and it's going to impact New Jersey and New York City a lot. In New York City, commercial real estate's going to get hit hard in the coming year. Businesses don't want to be in New York City anymore. They could work from home, and it's going to cost less money. So, I think there's gonna be big changes, especially in New York City with commercial real estate and real estate in general. So I gotta go. Thank you very much for everything. If you need anything, please give me a call. If you know of any apartment buildings, I'd love to buy them. Houses we'd love to buy. We'd love to help you out in any way possible. Even if we're not going to provide a service just to help you out, we'd love to do it. So again, my name's Joseph J. Zoppi. Thank you very much.
Life can be a roller coaster, and sometimes you need to sell your house fast. That's why there's TemplarBuysHouses.com. Maybe you're downsizing, getting a divorce, having health or financial issues. If so, head to TemplarBuysHouses.com. TEMPLAR BuysHouses.com. TemplarBuysHouses.com will buy your house quickly and without hassle. If you've inherited a house that is vacant, contact TemplarBuysHouses.com. Dealing with them is easy and quick. No high-pressure sales tactics, and you won't have to fix up the house. They will buy your house as is. You pick the closing date and when you move out. No commissions and no hassles. Contact TemplarBuysHouses.com. TEMPLAR BuysHouses.com with an A+ rating from the Better Business Bureau. Call 973-315-7990. That's 973-315-7990.
Be sure to listen to the podcast of the Templar Real Estate Talk Show. Find it now at TemplarBuysHouses.com.
The preceding program was paid for by Templar Real Estate. The views and opinions expressed are not necessarily those of the staff and management of WMTR. As always, it is advisable to consult a professional before making a major decision.